Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Tuesday the 16th of the 3rd, 2021. Time is just coming up to 0455 GMT, Asian session coming to a close, European session about to fire up. Our lunchtime is the North American US session. Right, make a start then. Yesterday, Monday the 15th, the flows look like this. So we had a positive opposed driver in the dollar at plus 45. Front and backdoor flows going mainly out of the euro at minus 31, next out to the pound at minus 28, and the yen was the positive rock at plus 14, activity plus or minus 59. Intra-week then, this is from yesterday open to about 15 minutes ago. We've got a negative unopposed driver in the pound at minus 105, no backdoor flows. The opposing positive flows predominantly going into the dollar at plus 76, the yen at plus 24, and the euro at plus 5. Activity plus or minus 105. Right, intraday then, this is what's happened in the Asian session to about 15 minutes ago. We've still got this unopposed negative driver in the pound, minus 73, no backdoor flows, and the yen has been soaking up the bulk of them at plus 36, euro next plus 29, and the dollar is the positive rock at plus 8. Activity plus or minus 73. Right, what's going to knock it about then? So Monday, which was yesterday, we had strong China retail sales, although it was a double figure for January and February, or strong, reasonably strong anyway. Tuesday, which is today, we've got US retail sales, which is going to be very important, as we'll talk about in a minute. And Wednesday, tomorrow, we've got CAD CPI, Fed rates and New Zealand GDP. Thursday the 18th, AUD employment change and the Bank of England rates decision. And Friday we've got AUD retail and CAD retail. Right, okay. So let's just get rid of this and have a look what's been happening in the asset classes. And then our trades come back a bit. As you know, the peak we're about 1150 points up. We're probably about 650 up now, but we expected some pullback going into the Fed for a while anyway. So right, Euro complex, full Euro complex then, 7 pairs. Euro is strong except against the Swiss franc. Yen is weak except against the pound, the CAD and the AUD, which are weaker. The pound is weak across the board. The Swiss is strong across the board. The CAD is weak except against the pound. The AUD, what we got there is weak except against the CAD. Okay, the NZD is strong except against the euro, the dollar and the Swiss, which is stronger, and the dollar is strong except against the euro and the Swiss. So euro and Swiss are obviously quite strong. And what have we got? We've got pound weakness, we've got Swiss strength across the board, and take your pick in the middle. Right, let's have a look at the other asset classes before we do the analysis. Right, dollar index basically went through the highs, come back, and it's not actually reached previous highs that it went through. So dollar index the dollar's come back a fair bit, but it's still relatively strong. Gold has been basically deteriorating, but it's come back a bit. It's about 0.3 now from the modelled floor. Due to basically it's had a bounce due to dollar weakness, relative dollar weakness. Oil has been on the up. It went back down, and then it went up, and basically it's operating sort of quite high but below the highs. Right, Wall Street is the star at the moment. It's been pumped way above the previous high. The S&P is where are we? It's just now come above the recent high, and the tech is operating about half marks. So that's the batting order. Wall Street screaming away. S&P now poked its head above the previous highs, and the tech is about half marks. Right, US 10-year and the bund. The US 10-year, let's have a look. It's about there, it's about 0.1, and the bund is about 0.4 in our model terms. Remember, these are prices, so yields are pretty strong, but they just come off just a tad on the US 10-year, and the bund as this is the price, and they bounce, so the yields have come off a bit there as well. Remember, this links in with the euro dollar, so you've got relatively stronger yields in the US to Europe. Right, copper basically got 1, 2, 3, 4, 5. It came back to the second pump, went more or less back to base camp, went up to the third pump, and it's now operating at about 2.5 on the pumps. Right, so and US steel, just to finish off, US steel had this complete recovery, and then they've sold it off at the double top effectively, which is 0.8. It's now operating at 0.8 from the floor. Right, that's that. So let's just make some analysis then. So the key thing then is we've got a bucket full of data and events this week. We suggested that the main place to be in the short term, and this wasn't where we are, but if it helped you, then basically it was pound dollar and pound yen short, and that panned out pretty well. We've got this retail sales later today. If that comes in reasonably strong, and bearing in mind that the where are we? The Bank of England rates decision isn't until Thursday. The likely scenario is that the pound dollar will basically get both barrels. It'll get the bounce from the US retail sales, and it'll also get the spook from the Bank of England. It's just going to be the obvious short sale basically. So, and with regards to the pound yen, well, equities are looking quite strong. So the equity transmission, and obviously if you get a strong retail sales, that's likely to give a bounce in the yen transmission. So we're likely to see yen weakness and pound weakness. So whilst the yen weakness, it depends who's going to win out on there. So the best place to be now is short pound dollar in our opinion. That's not where we are for our long to medium term trades, but if you're looking for where to be today as we run into the Fed, that's favourite. So I hope that was useful. See you again tomorrow for the daily briefing. Thank you very much.